So, today we're digging into the blueprint for a steel titan's next decade. A brand new analyst report just dropped, and it reveals TataSteel's massive new ambition. The big question is, how does a giant like this plan to get even bigger? Let's dive in.
It's the classic challenge for any industry leader, right? When you're already at the top of the mountain, where do you possibly go next? Well, for TataSteel, the answer isn't just a vague strategy, it's a number. And trust me, it is a very, very big number.
And there it is, 37 million tons per annum. That's the production capacity TataSteel is shooting for in India alone. Just to put that in perspective for you, that's enough steel to build something like 500 Golden Gate bridges every single year. This isn't just a small step up. This is a massive statement of intent.
Okay, let's break this down. We're talking about the company's next chapter. This is a huge, decade-long plan that's really designed to fundamentally reshape their entire footprint in India.
So here's the headline number you need to know. Over the next decade, TataSteel is planning to add about 10 million tons of new capacity. Now, this is going to roll out in different phases, but it represents an absolutely massive leap from where they are today.
Right, so where is all this new steel actually going to come from? This isn't just one single mega factory popping up. Nope, it's a carefully coordinated expansion happening across several key locations. Let's take a look at the blueprint.
And this table here, this basically lays out the entire battle plan. We're seeing huge moves all over the map. You've got a massive 4.8 million ton expansion in Odisha, a brand new 6 million ton project kicking off in Maharashtra, and then these strategic 1 million ton additions in Jamshedpur and Meramandali. It's a real multi-front expansion.
But look, this is about way more than just cranking up the volume. It's about smart strategy. On one hand, you've got some really cool cost-saving moves. They're bringing in this new Hisarna technology in Jamshedpur, which could slash production costs. And on the other hand, you've got pure growth. Their big push into Maharashtra, that's what's called a greenfield project. They're building a whole new facility from scratch, which is a first for them in that state.
Of course, a plan this big, well, it has a price tag to match. And that brings us to maybe the most critical question of all. How on earth are they going to pay for it?
Okay, before we get to that price tag, let's just quickly get on the same page with a key term, CAPEX. It stands for capital expenditure. All it really means is the money a company spends to invest in its own future. Think new buildings, new tech, new machines. It's the money you spend to grow.
And here is that number. The total CAPEX is estimated to be around 1,000 billion rupees over just the next 6 years. I mean, that is a truly staggering investment. So, again, where is all that cash coming from?
You'd think, right, that an investment this big would mean one thing, a mountain of new debt. But what's so interesting is that the analyst report suggests TataSteel has a completely different playbook in mind.
And this quote from the report pretty much says it all. The plan is to fund this entire thing internally. So instead of taking out huge new loans, they're aiming to use their own cash flow, the money they're actually making from the business, to pay for everything. This is huge because it avoids adding a ton of new debt and keeps their financials looking strong.
And this chart right here is the proof in the pudding. The net debt to EBITDA ratio is a super important health metric for a company. It just compares its total debt to its annual earnings. And the key thing to know is that lower is always better. So, as you can see, even while spending 1,000 billion rupees, their debt ratio is actually projected to fall dramatically. Now that is some serious financial discipline.
So, let's recap. We've got a bold plan, it's fully funded from their own cash, and their financials are actually getting stronger. That sounds like a slam dunk buy rating, right? Well, this is where the story takes a really interesting turn. The analyst's verdict is a lot more cautious.
The official rating is a hold. And what's more, the price target has even been nudged down a little bit. So what's going on here? Why all the caution when the company's internal plan looks so solid?
And this slide gets right to the heart of it. It turns out the analyst's caution has almost nothing to do with TataSteel's strategy itself. It's all about the bigger picture. They're forecasting that global steel prices could actually fall. And if that happens, it would squeeze Tata's profits, no matter how efficient they become.
This table shows you the math behind that thinking. If you look at the estimates for 2026, the analyst has downgraded their forecasts for key things like revenue, EBITDA, and profit. So it's this less rosy view of the overall market that's holding them back from giving a more bullish rating.
And that brings us to our final section, the risks.
We're talking about the external, global headwinds that could really challenge TataSteel's journey, no matter how perfectly they execute their own plan.
The report highlights a few major risks to watch. A big one is a global recession, which could just crush demand for steel. Then there's the risk of a flood of cheap steel exports from China, which is dealing with its own economic slowdown. And of course, downturns in huge sectors, like China's property market or Europe's industrial base, well, that could have a massive ripple effect. These are all storms brewing way beyond the company's control.
And that really is the core of this whole story. It's this fascinating tension. On one side, you've got TataSteel making this massive, confident bet on its own future. And on the other, you have a global market that is just filled with uncertainty. The ultimate success of this whole blueprint is going to depend on how that tension plays out.
Which leaves us with this final question to think about. TataSteel is building the factory of tomorrow. The question is, will the world be ready to buy what it's selling? Thanks for tuning in.